Hello, fellow traders. Tis I, the Rumpled One, to you on Wednesday, April the 29th, the year 2020. Let's talk trading, brain management, part two. Yesterday, I brought up this subject of brain management because, as you know, we talk about money and risk management. In fact, we shared or Walmart shared his 10 5 1 money management, and we've talked about risk management, many times every day. We always say you do not allow yourself to lose any more on any one particular trade than you're willing to lose, because that's your risk. Now, fellow traders, remember, these videos are for educational purposes only, and that your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. But back to brain management, um, I read, it's really, I read an email I got today. It's just really funny how when it seems I get on a certain topic, all these things start coming to me about that topic. Now, I don't know if that's just my filtering system. These things are coming all the time, but just now I'm paying attention to them or not. But it's just really funny in this particular case how I started the brain management um, series yesterday, and then I get an email today that's basically dead on it. And what it says is, in a nutshell, is that in life you are going to experience pain and loss, and that's something this whole coronavirus thing is teaching us. you know People have experienced loss, friends, relatives, businesses. There's a lot of loss going around, and hopefully it hasn't touched you. um and the thing is, sometimes these things come out of nowhere, and they can wipe out everything in an instant. I mean, a tornado, a fire, a flood, a hurricane, a bomb. Everything you worked for could just be gone in an instant. And so in trading, that's why we say, you have to have your risk management in place, because the market can move on you. And if you don't have it, you could be completely wiped out in an instant. Um, I think some of you may have seen it or experienced it or know somebody who has. But the other thought that came across in this email is something that I've spoke on before, but it's actually something from Marcus Aurelius. This is from the Stoics, and he said, "You have power over your mind, not outside events. Realize this, and you will find strength." And that's kind of what I had mentioned yesterday when I said, if you look at a chart and you're not in a trade, price moves, and basically you probably don't have any emotional. Now you might have some FOMO happening if you think you see something, or some ROMO. It's like, oh man, I could have taken that trade and I missed out. So you can't, and this is your brain doing it to you. This isn't the market. This is your brain. Okay, so this is your reaction to the market when you do these things. The market's just doing what the market does. Okay, and so what you have to do is, when you're looking at the chart, whether or not you're in the trade, is basically pretty much react the same, which is, that's what the market's doing. If you're in a trade, it's like, do I need to exit the trade, or do I just need to wait? But as far as having some emotional upset or emotional elation, try to just eliminate that, because otherwise you're going to be in an emotional roller coaster ride. Because as price goes up and down, it's either going to move for you or against you. Do you really want to be on that emotional roller coaster ride? I don't think so. So the thing about it is, and I keep getting emails about mentoring, um, there's not much I can tell you other than take the trade at the horizontal line. Whether or not you take it, that's up to you. And what happens next is up to the market. And and the thing is, I can't make it any simpler than that. I just can't, you know. But we can move on and look at the charts here. You can see I've how long have I been doing these videos with the weekly gap? I don't know. Whether or not you take that statistical trade that seems to pay out week after week, month after month, that's up to you. Because remember, your results may differ from mine, but there's some people who are benefiting. Let's see. Let's look here at the daily candle. Looks like we're setting up to have an inside bar today. The week and the day we're up, and the month and the year we're still down. So we're down 177 pips. We've got what, today and tomorrow? I don't know if we're going to reach that daily open, or the monthly open for that matter. And you can see here we put in the opening range the first day of the week, and we popped out the top and slightly the bottom yesterday, and today we popped out the top. So those horizontal line traders taking this trade, once again, it paid off. Whether or not you took that trade is up to you. But these horizontal lines are there for your enjoyment, I guess, right? Inside bar. You see here we are inside the daily inside bar 15 days ago. So inside bar traders, obviously these were a lot gray. There's a lot more gray on Monday. So there were some inside bar breakouts. Once again, simple horizontal line trades. You just trade with the candle color at the line. On the daily, weekly, monthly, trade with the daily candle color at the line. It's that simple. And here showing today ranges. Only got 6 over 100. Euro only at 57. Yen at 54. And the pound at 96. But you can see here we're in yesterday's upper wick zone. Probably going to close within the wick zone. It's such a huge wick zone there. The pivot was above the open. The weekly open was above the open, but within the buy zone. So we crossed it, we hit the buy, took out the pivot. So pivot traders, pivot faders, fade traders, once again, looks like it was profitable. Rat traders, you can see here we started out at the bottom, moved to the top. Red rats got to enjoy. You can see we got the smart rat zone versus the original rat zone. And just so you know, the smart rat zone, it says 20% of close, or rather of high minus close, was this many pips. Okay, that's what this number means. 20% was within this many pips. And in this case, this is saying 38% of the high minus close were right here within this distance. So that means 40% of the time price closed here, but 60% it closed somewhere down here. And the other number, 73, that's for right here. So 20% of the time, the close of the day minus the low of the day was this distance here. But 73% of the time, it was this distance. So you can see there's not much to be made on the upgoing long here because it is 73 number. And the pivots, we took out that pivot. And where is the weekly pivot? The weekly pivot's right here. We'd already taken that out. Here on the weekly. And on the daily, you see we still have that missed pivot. And we've got one from 2 days ago now. As you can see, price is going to be stuck in that wick zone. Look at the size. The high minus close. Previous high minus close right now is 32 pips. But this is just a huge wick zone. It looks like 60 pips. Okay, we're looking at the pound here on the wall mall method. As wall mall, I guess, switch back to the pound, and depending on how far back you go, I don't know if he took this trade or not, but that was sure a nice trade. And here was another one that obviously paid off, but he doesn't usually take that first bar, so he probably didn't take that one, and maybe he didn't take that one. This looks like one he may have taken, and this looks like one he may have taken. He maybe took it a second time. I don't know if I think he's done trading for the day. I think I told him he can't even trade anymore this week. He's already hit his weekly goal in pips, and it's just Wednesday. So he should be taking Walmart. If you're listening to this video and you're still trading, you're breaking your plan there. Okay, once again, traders, mentoring, bring up a chart like this, the sweet spot indicator, okay, right there. That'll put these lines on here. You really don't need any other indicator. You really don't. H1, candle color at the line, you go long. Okay? And you don't even have to worry about the color of these. This just shows you what happened since the beginning of this hour. Price opened between here and here. Go long here, go short here. It's that simple. That's it. You put your stop loss on. You take profit when you can. I mean, part of trading, loss will be part of trading. It's something that really can't be avoided. Even if you average in and you average out with a profit, one of those trades could possibly show a loss. So losses are just part of trading. And so what you have to do is program your brain to not experience pain when you experience a loss. You just shrug it off. Hey, it's like going up to the plate in baseball. Sometimes you strike out. Sometimes you get a bad called strike. Sometimes you pop up. Sometimes you hit a ball, it's going to go over the fence, and some guy makes a leaping catch and robs you. It's part of the game. No reason to get upset. Just wait for your next turn at bat. Get your mind in the game. Do what you need to be doing when you need to do it. It's like be where you need to be when you need to be there, and do what you need to do when you need to do it. So you're here in front of the screen. You need to go long. When price hits that line, you go long. And if it results in a loss, that's just trading. Okay, we're looking at these ranges again here on the M5 candle. You can see here we're talking a 1 pip range there. There's some nice ranges, and that just shows you, you take these candles, don't expect them to keep running. This is what's going on here. I mean, every now and then you get a runner. There's a 20, there's a 13, a couple of 11s, there's a 10, but just really don't expect it. I just realized something. I should probably highlight the hour here like I did on that other indicator. Maybe even draw something out here, but I'm still working on this one. Haven't done all the pretty printing yet. See, it doesn't even have the name or anything on it, but that's still in the works. And what I'm calling the map, you can see here places where price should probably hit. So we're looking at the upside at 64 because there's nothing blocking it from here to here, at least not from H4 and above, because sometimes H1 is going to move. So if we look here at the H1, you can see H1 is moving here. You can see how far it moved. And so right here, looks like we're at the open of the last H4 candle going above it. And looks like we're trying to go to the top of previous week. So that's about 8 pip difference there. Okay, fellow traders, brain management. The only thing you can control is your reaction to the market. You can't control the market. So just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're new here, hit the subscribe button. And if you're watching it, hit the like button.